All right, good morning. Let's go over today's trade plan. So in the overnight session on the non-farm number, it came out better than expected, and we got a upside reaction to the 86.75 to 88.75 zone, which was the main upside objective on the jobs report. So the main target has already been met. Now ES is making all-time highs, so there is no hard resistance. If anything, this overnight high could pose as some resistance, off the open. But other than that, if we continue going through, the pre-market resistance zone and go through 86.75 to 88.75, there's really no hard resistance above here. So we could make a move up to the 94 to 96 area on the day time frame. Now, for now, we have to keep our focus still more on the long side, but since ES is trading at really elevated prices, we have to wait until the open to see whether there's still enough strength in the market to warrant, taking any aggressive long setups at these higher prices. Or, the conservative strategy is to simply wait for a pullback. The flip side of that is that the pullback may not come, right? If the market is really strong, then we really should not even get a deep pullback, and we should ideally hold above the 79.5 to 80.5, and ideally even a little bit above that. Even that much of a pullback shouldn't really happen in the market, and we should get some continuation higher. And then if you do get a deep pullback, I do expect rotational activity at the very minimum, but below 76 quarter to 78 quarter would be a complete 100% reversal of the upside move off the non-farm number. So at that point, it would tell us that there's actually some short-term weakness in the market, and we could go down to the 70 quarter to 72 quarter support zone to find buyers and then start balancing in a range. So today, really, heading into the open, we are going to be more focused on what we're seeing in real time because we are trading at very elevated prices. And it doesn't mean that we can't go higher, but we have to identify trades where we can use a modest stop size of 2 to 3 points and then, shoot for a 4 to 6 point target, ideally more than that. So, to get that minimum 2 to 1 reward to risk means that if we're using a 3-point stop, we have to be shooting for a 6-point target. And, in this market, it's not about identifying simply which side is in control, but it's about identifying a spot where you get that good reward to risk. And, at some of those higher prices, even though you might continue higher, it may be a scenario where in order to take the trade, it requires a much wider stop. And because of that, you might not have a very good reward to risk on the position, and you might just have to, take a skip and just pass on the trade. So, right now, I think that the prudent approach is to continue to be selective. We're trading at some pretty high prices. There could be some profit taking on the day time frame as we head higher. And, for those reasons, I still think that even though the buy side is clearly in control and the long setups have edge, and at the very minimum, I expect rotational price action at the support zones. You still want to be cognizant of the fact that, we are trading at 1886 now. And although the market could be heading much higher over the next week, on the day time frame, there might not be as much upside. And, for those reasons, I think the prudent approach is to take the conservative setups, which are basically longs at support, right, on pullbacks into support. And if you're able to get good trade location where you can use a 2 to 3 point stop that makes sense, right? It's not just an arbitrary 2 or 3 point stop, but something that's logical. Then in that case, of course, the trade makes sense and you should take it. But chasing in this market is something that I would advise against because you could get some rotational price action at the overnight highs, at pre-market resistance, and even though eventually we might break out higher, if it tags your stop before it makes the move, then the trade doesn't really work out for you. So right now we're still going to be conservative. Our focus is still on the long side, but also on getting good trade location, not just taking every long setup that we can get. So those are really the main ideas heading into the day. If we break 76 quarter, 78 quarter, that would be short-term weakness. So just keep an eye on that one. We should not really break that. Ideally, that zone should hold. And if it doesn't hold, then anyone who's expecting an upside breakout would be underwater at that point, and we could go down to that 71.5 naked VPOC, and then that area can attract more buyers, and we get a nice bounce back up. But today is going to be a lot about reading the market in real time. So let's see, how good the internals hold up. Let's watch where momentum is off the open. Ideally, you want to see a positive tick distribution, and the NYC tick holding above zero, or at least spending more time above zero early in the session. And that'll help us basically figure out how bullish this context really is. So those are our main ideas. Let's see how well we hold up off the open, and we'll take it from there.